That was 2016. And very lucky timing, obviously, because early 2017, things started picking up a little bit. Gotten so much easier from both the career risk perspective, but also just overall. I still think that Ethereum's approach is the most logical to me. I think it's the most elegant one, but it's also like the least retail friendly one. It's the most scattered one. It creates so many like issues of fragmentation to liquidity and stuff like that.
Do you think ETH maxis are doing the same thing to Solana what Bitcoin maxis did to ETH? Welcome to the Deco podcast, where we bring you stories from founders and investors in Web3. Before we get started, this is not a financial or legal advice. It's just a conversation about things we find interesting in Web3. Views expressed are our own personal opinions. Deco members or guests appearing on the show may have positions on assets they talk about. All right. Welcome to another episode. I'm here with very special someone. He's my ex-boss. I haven't met him personally, but I'm glad that I didn't, because I am 5'6" and Larry is, 7 foot, 10 foot. I don't know how tall he is. I've seen all the pictures where the rest of the people are on ground floor and Larry's head is sticking to the ceiling or whatever. But yeah, that's Larry. Larry is the CEO of the block. He used to be head of research, but I think about a year and a half, Larry was promoted to become the CEO. So there'll be a lot of stuff about how his responsibilities have changed and so on. But yeah, Larry, welcome to the show.
Thanks for having me. And for the record, I'm 6'11".
Not 7
feet yet. Yeah.
All right. Larry, before we get into all of the crypto stuff and your roles and responsibilities, something that I've always wanted to ask you was, how did you transition from basketball to crypto?
Yeah, relatively simply. So, going back, some years, I went to the US when I was about 16 and I played basketball there for 7 years or so, 3 years in high school and then 4 years in college. At least that's what I thought I would do. But then in high school, I had my first knee injury, which was torn meniscus. I ended up having a surgery, and it was a bad tear, meaning like they had to remove most of the meniscus, which is a bad injury in basketball because you lose the jump, but also it's a painful injury. So I kept playing through it. I ended up going to D3 to play basketball at Skidmore College, but then I hurt the knee again, and it just became too painful to continue playing. So after the first, I believe, year and a half of playing, I just decided it's not worth it at that point. Obviously, if you go to a D3 school to play basketball, you're never going to make it to the NBA. You might make it to Europe to play professionally and make some money, but that was not the career that I wanted to have regardless. For me, it was either I magically somehow make it to the NBA after high school, which didn't happen, or I end up doing something completely different. And I was very drawn to finance in general, studied economics and finance, double majored at Skidmore College. And as soon as I quit basketball, that's when I started really diving deep into Bitcoin research. That was 2016. And very lucky timing, obviously, because early 2017, things started picking up a little bit. So Bitcoin went up from very little to about $20,000 in a year and a half span. And that's, when I already was full-time in crypto. So I joined crypto full-time right after college in mid-2017, and I joined a publication called DR, which was effectively the first research publication that covered crypto. And from that point, started tweeting more, growing my audience, but mostly just doing research that no one else was doing. And I was one of the first people that actually were doing serious research. And that helped me, get into the spot where I am today. Just being early and being one of the few people that kind of saw the opportunity in a more serious research offering than existed before.
The way you experience the industry, has that changed from 2016?
Oh, yeah. Changed a lot.
How has that changed? It has changed a lot, but how?
Look, the first thing 2016 that I noticed back then was that the only research that really existed was that either had the complete fanatics, right? People that were saying Bitcoin is going to $10 million, which even back then, it was batshit crazy. Now it's a little, now you're like, maybe that might happen. But back then it was batshit crazy. And then on the other side of the spectrum, you had all the university researchers, professors and stuff. And it was these two insanely differing views, right? One was this is the future of everything. And the second one was, this is complete bullshit. If you're spending time on this, you're wasting your time. It's dying within a couple of years. And it was kind of interesting to me because I saw some promise of, freedom in Bitcoin. I saw a promise of just, less kind of oversight from governments. And there were some properties that really resonated with me. And I thought, why would we immediately go to it's either the future or it's dying within a couple of years? Why not go somewhere in the middle and try to write objective research about what's actually happening on chain, what's happening socially? That's what, I started ultimately doing, because there's no one in the middle. There's maybe one or two other people who were doing that. The rest were maybe 50 to 100 people on these two sides of the spectrum. That has obviously changed drastically since then, right? In 2017, things went up a lot. There was a crazy mania when it came to, bullshit projects building something that had no use just because it was easy to raise money at that time through ICOs. That mania then crashed drastically again. In 2018, we went through the first full cycle, which is when I also joined the block in late 2018 when things were, kind of dead. I remember the consensus at that time was that even from people in the industry was we don't even know for sure that this will come back, right? It's now obviously so implied for people that work full-time in the industry that this is something that will be here in 20 or 30 years. Back then, it wasn't. I remember in 2017 and 2018, I was thinking, holy shit, did I make a mistake, jumping full-time into crypto and dedicating my first 2 or 3 years of research experience in this? Because, the sentiment was really shitty. And ultimately, most people end up sticking around and believing that this will be something that will bounce back. But these 2 years were pretty slow and painful. There was not that much to write about, not a lot of teams actually building anything. I remember even at the block, some days we had trouble finding, 10 articles to write. And now you have every day you have hundreds of pitches in your inbox. You can easily be writing 50 plus articles if you actually want. I mean, most of them are not going to be high quality, but back then we actually had problems with what are we even going to be writing about? There was just not that much content. And the same thing was true for the research side as well. So that has changed really drastically. The overarching belief that crypto will be here in a long time, specifically Bitcoin, that wasn't the case before, even for industry veterans and insiders. And, I think another difference is that back then it seemed like I almost felt, ashamed working in crypto because there were a lot of people that you would not want to be associated with, that end up working in crypto, that end up being the advocates for crypto. And I think that has changed as well. I think now a lot of, people can be proud to be in this industry because it attracts really smart, motivated young people that actually want to work here and dedicate their time to it. And that wasn't the case before. It's gotten so much easier from both a career risk perspective, but also just overall, just to have a little bit more of, just you being slightly more convinced that this is the right thing that you're doing and that this is something that will still be here in 20 years. That's important. And that wasn't the case before. But obviously the implied effect of that as well is that when very few people believe that this is the future, the opportunity is a lot larger. Now when a lot more people believe it's the future, opportunity decreases. And that's exactly where we are right now.
You mean individual rewards are much lower now compared to what they were back in the day?
For sure. Just in terms of how much attention there is on crypto, right? We have a presidential candidate having maybe 10% of his speeches mention Bitcoin specifically. It's now one of the most discussed topics in U.S. politics. It's something that now has the global stage, and when there's when it already has the global stage and the awareness of Bitcoin, Ethereum, Solana, whatever else is already quite large, the upside obviously gets smaller. And not only that, but also opportunities to find new projects, for example, and be early to something is a lot harder than it was in 2019. It's a lot easier to make money when there's a lot less people watching the space 24/7 and also more sophisticated actors, right? In 2019, we used to just be on Etherscan and a lot of these cheap tools with no coding knowledge whatsoever, and you could make a lot of money just scouring things and being constantly glued to your screen and doing these things that no one else was doing at the time. But now there's people doing this in an automated way, really smart people, quants, scouring these things 24/7, and the opportunities just get smaller. Which is why I think there's a lot more interest now in trading meme coins, because it's just more opportunity there. Everything else gets sniped so early, and all the launches are so high that it's hard for people like myself to have the same opportunity as we did in 2019 and 2020. And that obviously is good, and it's also bad for people like myself, but overall it's good. It's the industry is professionalizing.
So in 2018, when I think Bitcoin went down from 42, 3,500, And you were saying that you had lots of doubts. So what is it exactly that kept you going? Because I'm pretty much sure that your friends, everyone was giving you shit about being in crypto.
Yeah. I think it was the belief that something like this should exist. It was the belief that like there will always be a use case for this. It might be, smaller in the future, but I was quite convinced that the freedom that it gave people and, what it allows you to do is not something that can be replaced by anything else. So in terms of product market fit, it seemed like something that will stick around for the long haul. The biggest question mark was, is it going to ever get as much attention as it did in 2017 and 2018? And was that just like a fluke? And now like Bitcoin is going to go back to, a few $1,000s and stay there for, 20 years. That was really what I was discussing. It wasn't like there's no use for this technology. Like it seemed very clear to me that there is use for this. I obviously from a research perspective, I looked into places that are using Bitcoin more than others. I looked into, what are the main uses for Bitcoin specifically? Why are criminals using Bitcoin? Like those sort of things. And it seemed like really clear to me that that's hard to actually replace with anything else. I wasn't, for example, sure if like BlackRock was going to be buying Bitcoin, right? Or if any like serious financial institution would be buying Bitcoin, let alone within, 5 years from that point. Or Tesla, that was like 3.5 years afterwards. Like I would have never guessed that in 2018. It was like such a small industry at that time. And there were only a few people that were like super high conviction, but the more serious people, hedge fund allocators, trading firms, whatever else, pension funds and private companies, even public companies, it was almost a meme that they would eventually be buying Bitcoin, but not many people actually believed it, I think, including myself, at least within the time frame.
Were you also sure that somehow if this thing sticks around, you will be financially sorted?
I was quite sure that I was in the minority in terms of having this belief and being early to that belief. And generally, that to me indicated that there is good amount of money to be made if you're early to something that most people still think is a scam. And honestly, I made some money on Bitcoin, but in 2017, 2018, Bitcoin was already in the, 5 to 15,000 range anyway, most of the time. So I was buying a little bit with my salary after, it kind of converted from being a no-coiner, which I think was like 2019 or something.
Oh, that's a meme, right? When did Larry...
when did Larry buy the first Bitcoin? Yeah. I mean, honestly, it's kind of funny that it became a meme. I don't really even know where these tweets come from, but basically the first time I bought Bitcoin was in college, maybe 2015 or something. I don't remember exactly. But I was using it because I wanted to look on the dark web and looking at how to buy, for example, stolen NBA accounts so I could watch NBA. I didn't have to spend so much money on it. It always fascinated me if you can buy drugs and if you can buy guns online, there's probably something to the technology. That was my first fascination. That's when I first bought Bitcoin, but it was insanely small amounts. It was $50 to $100 or something. And I held maybe 10% of it. It probably became, 10x or whatever, but it was still in the hundreds of dollars. It was nothing. I first started seriously investing, I think probably 2019 or something, actually putting in real money. But where I actually made the most money was to bet on ETH itself and on DeFi. That's when it was so obvious to me, 2018, 2019, how much bias there was from Bitcoiners and from even non-Bitcoiners against ETH and against smart contract blockchains in general. And ETH was trading at, $100 to $200 at that time, I believe. And that's when I started building a conviction position and I ended up buying good amount of ETH. And then I was quite early to the DeFi trend, ended up, being early in a lot of these protocols Swap, Aave, Curve and some of the other ones. And obviously farming some of that. But overall, just interacting with DeFi very early on, and that ended up being very financially good. But yeah, that's where I initially made the most money in crypto. That's where the opportunity was so large. And I think it was mainly because not a lot of people believed it initially. And then, all of a sudden, very quickly, DeFi became a thing. Binance started listing all DeFi coins, and it quickly turned into a large industry. But not a lot of people believed in it in 2018 and 2019.
Right. Do you think ETH maxis are doing the same thing to Solana what Bitcoin maxis did to ETH?
I think to some extent, I'm seeing similar strategies, which is being completely dismissive of it, demeaning, not always being most up to date on what's actually happening. Those are some similar trends that I'm seeing. I will say, I think Ethereum supporters and Ethereum maxis are much more reasonable and much smarter in general than Bitcoin maximalists were in terms of like their argumentation and their reasoning. But there are definitely similar trends. And I think what they don't realize that much is that, you know, because you focus so much on one thing, it ends up like clouding you a little bit in terms of other things that are actually happening. Now, I'm also of the opinion that there are some problems with like how Solana, you know, wants to scale, but it's an approach that I think is an interesting one, and certainly an approach that ended up attracting the most retail investors. That's the most retail friendly, right? Like constant issue that I saw in 2019, 2020, even with some of the initial meme coins like, you know, Shiba Inu and some of these, you would see so much buying pressure on chain on Ethereum, but these people were paying sometimes like $20 of fees to buy like $100 of tokens. And like I remember tweeting about that a bunch in like probably 2020 or something, 2021, whenever that was. And it just made no sense, right? Like, how are you buying a position and then spending 20 or 30% on that in gas? And yeah, I think like Solana is really good for that. You know, Binance Smart Chain obviously was the first one that ended up like being the short-term plaster for ETH. You know, now Solana has taken over that. I think Ethereum maxis underestimate how much the power of that is, which is like most people don't give a fuck about the technology. They really don't. Yeah. Like the reason why people are gambling on these meme coins and on these shit coins is because they think there's an opportunity to make money and because they view it as a casino. But obviously they would not be doing that. They get smarter after time. That they would not be doing that if they're paying insane transaction fees and within 5 transactions they lose the entire investment. And you know, I think that's the biggest change this cycle is that that's something that retail has figured out, and it ends up creating a sticky experience for those people. And because Solana is like relatively isolated from other EVMs and has its own infrastructure, like it creates a very solid base that might eventually, you know, like get smaller, but it will still be the first experience that a lot of these retail investors end up getting. That could then open up, you know, more interest for them to look into other stuff outside of meme coins. But I do think that the effect of this is greatly underestimated by Ethereum maxis. And it doesn't matter if the scaling approach is not the most elegant. What actually matters is like, is it the most complete at the moment? Is it the most retail friendly? Does it have the best UI UX? And it certainly does. Like so Solana, when it works really well. You know, sometimes it obviously doesn't work as well, but like most of the time it will work better than losing most of your investment on transaction fees. And that's just the reality.
Right. And you said that you see some issues with Solana scaling. Like, what are those?
I think the main one is the most obvious one, which is Solana makes a simple bet, which is that technology ends up scaling with demand overall, right? Like the hardware requirements as well as the size necessary to process all the transaction will continue going up.
Even Moore's law keeps working. You're right.
Correct. And I don't think that's that obvious to me. I think it's possible, but I think it's a bet that's, not like super clear cut to me. I think as someone that tries to be as impartial as possible, I do have some Sol. I, do have some other blockchain positions. I still think that Ethereum's approach is the most logical to me. I think it's the most elegant one. But it's also like the least retail friendly one. It's the most scattered one. It creates so many like issues of fragmentations of liquidity and stuff like that. And so like you constantly have to weigh if like, okay, well, is the best technology actually going to win, or is it going to be a slightly worse approach that eventually gets figured out that's just the most retail friendly? And I don't have an answer to that. I think it is possible that Solana beats Ethereum. Maybe it's a 15% chance in my mind, but even if that's the case, how would you not want to be exposed to that? Why would you not want to pay attention to that if someone's figuring out how to actually onboard a lot of retail users, which Ethereum like tried and failed on, So that's my view. And, I remember having some early conversations. I think this was from, when Serum announced that they're doing a DEX on Solana. Like that was the first time I ever heard about Solana in like a more serious setting. And at that time, I was like, yeah, it looks fine. And Solana was at I think 50 cents or something, a couple of dollars.
Yeah.
And, those opportunities are hard to come by now. Most things launch super high FDV and you're kind of like forced to, kind of write down the price chart, watch a lot of people cash out, and only then you have an opportunity to buy in. That wasn't really the case, 2, 3, 4 years ago. you had opportunities where if you thought you had the correct information, you could have easily made, 50 to 100x. So much harder now. And for me, I also have a lot less time to do this shit now, but even if I had a lot more time, I think it's just much more difficult. Like, I think if you're looking for 100x opportunities, your only way right now is just gamble on meme coins. And like, that's not what I want to be doing in my free time. There's certainly people that are good at that, but that has changed. Like 3 or 4 years ago, you could have bet on technology, just having some asymmetrical information of like, I think this is better than people think. Not a lot of people know about it yet. Let me just buy into it. And that was enough. That's no longer enough right now.
Right. Oh man, so many directions to go in. But what you mentioned about Ethereum reminds me of a few episodes in Silicon Valley where they build a great product, but the product makes users feel dumb.
Yeah.
Users feel that they are dumb to use this product and they are not understanding anything. And, obviously what follows is they have to revamp the product and so on. So I think what you allude is Ethereum is probably somewhere there where the approach is elegant, but it's not practical for users at the moment.
Exactly. And it's not practical yet, right? It might be practical in 5 years. The question is that going to be enough if it's practical in 5 years and like someone else already wins the battle for retail users? The thing about blockchains is that, they're relatively kind of set in stone, but you can still make adjustments. Like if Solana changes their approach in 4 years, ends up doing layer 2s as well, like who is to say that they wouldn't be able to implement it better with already the necessary UI UX improvements, right? I think that's the biggest problem, but that's something that Ethereum has struggled with. I think it also struggles with communication in general. I think the Ethereum Foundation is quite opaque when it comes to, overall, it's just their operations, what they're spending money on, like releasing more information about how they actually operate. And, Solana certainly is as well. But the thing with Ethereum Foundation is that there clearly is a communication and marketing issue, and they're still spending a lot of money, mostly, I'm guessing, for development-related activities. But it's not necessarily converting into, people actually using Ethereum more, at least at the moment.
Right. And you mentioned that you have less time. So from a researcher to heading research to becoming the CEO, what has changed for you, sir?
Everything has changed. I think,
before you answer, which is the one that you enjoy the most?
Oh, I enjoyed head of research a lot more. Look, being head of research is fairly a simple job. You have a team of people that report into you. You have some KPIs of what you want to accomplish, whether that's revenue, whether that's paid subscribers, whatever it is. And your job is ultimately find the best people, retain them, and then make as much money as you can with those people so that it is replicable if Larry gets hit by a bus. That's kind of your job. And that was quite straightforward to me. I was always good at attracting talent, good at finding talent, pretty good at retaining it as well. Overall, making money is slightly more difficult, and that was always a little annoying, but you get support from sales teams. There's also someone else that you can always go to when you have a problem, right? When you become CEO, you are the person that people go to when they have a problem. And it seems I only have 6 direct reports. Doesn't matter. People will go to me anyway. Or, they will go to their manager and that manager will go to me. You end up dealing with really ridiculous small problems a lot of the job, even if you don't want to. You end up dealing with HR related issues. You have to worry about financials all the time, make sure the company, has enough cash to continue operating, raises when it needs to raise, You're responsible for revenue ultimately. You're just the guy that people go to a problem. And there's a lot of problems. And, when you're head of research, you don't see a lot of these problems because a job of a good CEO is not to show these problems to people so they don't freak out most of the time. Or because it's so stupid, you don't really want to tell anyone about it. But you are the person that has to clean it up. And to me, that was the biggest change. It completely changes what you work on. It completely changes how much time you have because these problems pop up all the time. And it's just a completely different job. Now, the benefit of that is that you learn a lot of new things, right? I was in a head of research position for 3 years or so, 4 years maybe. Eventually, it becomes kind of a second nature. It becomes easy and, you can do it almost you spend a few hours a day and you already know how to automate most of it. And you figure it out. And then you have time for shitcoining and, investing and all that. The CEO job, not only did I have to fire half of the company when I became CEO to be able to optimize it and actually run it properly, I also ended up having to find a buyer for the old CEO because, he had huge loans. And so we went through a full M&A process where we had like 100 parties or so interested, going down to about, I think, 3 or 4 in the end, and like deciding which is the best party for you to go with. But running that full process, like doing interviews, like organizing all these financials, like basically I was thrown out, I was a 1-year-old child that was thrown in cold water and like, figure it out basically. And that results in, me aging probably 10 years in the last 2 years, but also you're learning a lot of new things and you being able to apply those things, in whatever you end up doing next. And I think that's probably the most rewarding thing on this job is that, at this point, I've effectively sold a company. I've fired half the people. I've, killed products, built products, dealt with HR issues. Like you're thrown into the water and you have to figure it out. And that's been rewarding, but also insanely stressful.
So when you were looking for a buyer, what were the few things that you were looking for? And what were the few things that were like, okay, this is absolutely non-negotiable?
Yeah. The main thing was, I was giving instructions by the owner at the time, right? Which was a disgraced CEO that ended up stepping down because of the FTX issue. And the instructions were fairly simple, which is, we need to be able to sell his shares so he no longer has a stake in the company and so he can pay off his debt. So the requirement was, let's find the buyer that will align with the mission of the block, plus also maximize the amount of cash that you get for that secondary transaction. So, now it started for us was, the company goes to us and says, hey, we'll buy you for $200 million valuation, but you'll be paid in stock. Like, we just couldn't do that. Like, a lot of M&A deals happen through equity, or it's an equity cash split. Our hard requirement was that there had to be at least some cash so that the old CEO could effectively at least be able to settle the debt. And, if you run a normal sales process, maybe you don't have these limitations, or it depends on kind of what your goal is. But that was probably the hardest one. Like, a lot of potential buyers drop off because they just don't have enough cash or they can't finance it. And so you have to be able to optimize for that. Another challenge that we had is that because we obviously, we have news, we have research, and we have data. There's a lot of companies that were interested in news and data, but also a lot of companies that were not interested in news at all, just in research and data. So you have like a few interested parties. I will not name any because we probably have issues. I can't really share anything. A few of them were exchanges or prime brokers, for example, and for obvious reasons, they didn't want to own any news business or media company itself, but they were interested in the research product that we had, or they were interested in the data product. So then you run into another issue, which is like, could you do a transaction where you split up the company in half and run the rest as a media company, and research and data goes to whatever exchange and gets integrated. So it's it's a lot of like scenarios like that. And the thing about like running a deep M&A process, like one, it takes almost a year. So it's a very long process. But two, you end up having a lot of options in the end, or at least that's the goal of the process, right? So that you have a few options that you can decide on. And what we end up deciding on is just to, bring on an investor that was able to buy out all of shares of the previous CEO and also not want to break up the business. They were interested in the full business and being able to, operate it independently. No large changes required. So it was just an easy transaction, basically just a secondary transaction where cash and equity swapped hands, and we ended up running effectively the same way. The only thing that changed for me is not like, the board is controlled by the new owner. So like my boss is now the owner of, or the majority owner of the block. But, in reality, not much has actually changed in how you run the business.
Oh, yeah, that's super helpful. You talked about news and research. So, like, how important do you think having news and research in the same shop is?
It certainly was insanely important to get started. In 2018, I don't know if people remember, but in 2018, the media in crypto was really shit. And the reason why I joined the block, despite like having other offers, like Binance, for example, which would have made me a lot richer. But the reason why I joined the block was because I felt ideologically driven by the fact that media was shit and research was shit. And I thought that that's something that needs to be changed. CoinDesk at that time was really bad. Like, it's hard to believe now because they are quite good and they got a lot better, but they were really bad. They made simple mistakes. Like some of the reasons why I ended up having, some followers on Twitter in the first like 10,000 followers was because I shitted on CoinDesk all the time. They would have made a mistake. Like 1 in 3 articles would have been a fatal mistake. And my initial thought was like, how could this ever become a real industry when the top media company in this space makes mistakes like this, which are like basic finance things or basic crypto knowledge things. And that irritated me. So what attracted me to the block initially was we need to build something that will be reliable. And that was the mission of the block, is to be a reliable media site that will not make stupid mistakes all the time. And, obviously I told that story because that goes back to why we had research initially. We needed a team, which at that time was very small, I think 2 or 3 people, that would literally fact check everything that came up, right? Like someone that understood everything about crypto, everything about the technology, everything about finance, or at least enough so that we wouldn't make dumb mistakes. And that, ended up attracting some audience to us, mainly professional leaning, which was kind of the goal. And that audience, ended up being built up over the last 6 or 7 years or so. And we've been able to take a lot of CoinDesk market share in that process. I think we peaked at about like 30 or 40% of the traffic at this point. And so it was very important. So we would establish reliability and establish a research-driven mission. Obviously, eventually we build that into a research department, end up monetizing research in different ways. But the initial reason for it was that we wanted to be accurate. We wanted to not make mistakes like all the other media companies were making at the time, including traditional ones. Like Bloomberg was insanely bad at that time, like so much worse than it is now. Now they have some good people. Financial Times was a joke when it came to crypto coverage. They made even worse mistakes than CoinDesk sometimes, mainly on the technological side. But I think it's hard to believe for people now because it's like mostly fine now, right? They make a mistake from time to time. Like Twitter has fun. And it's like, they're idiots. Back then, they were idiots every second day. Whenever they cover crypto, there was something wrong. And that was what kind of drove me to jump in and try to do a better job.
It's something very interesting, right? You mentioned that you chose ideology over something that would have made you money. And I've often seen that in this industry, ideology and making money are often in conflict with each other. So how do you resolve that? And to anyone, what's your advice to people?
To be honest, it was a more difficult decision. That it wasn't just like I'm ideologically choosing the block. There were a lot of factors. It also, a part of the compensation at the time from Binance was in BNB tokens, which were trading at $3, I believe, at that time, like $4, and now it's 100x from there. So, that's probably where I missed on the biggest upside. But that's certainly not something I could have imagined would happen at that time. If it was, I would have just joined a block and bought $50,000 of BNB, right? But that wasn't obvious. But because it was part of compensation and there were probably some lockup on it, I don't remember exactly, you probably would have kept a decent amount of it and ended up, making probably 50x your salary, which is what actually makes you rich, right? Not the fact that you joined Binance, but it was the BNB component of the payout. And I wasn't sure about that at the time. So it wasn't necessarily like, this can make me a lot more money, I'll just go to the block. I actually respected Binance at that time, and they were not as large as they are now. They were one of the largest exchanges, but it was not clear that they would become number one, but I liked them. And the people they had, and the funniest thing is, I think it was wasn't head of research position. It was director of research or something. I would be below the head of research. And CZ was interviewing me. He interviewed me twice at that time. That was late 2018. Binance was maybe, 200 people or so, but he was still interviewing even the more junior hires at that time. That was impressive to me, right? Is that someone so involved and cares so much about his people that he will still hop on calls with, a 22-year-old, whatever I was at that time. But also my to-be boss was a great guy that I still am in touch with sometimes even today. He's no longer at Binance, but they had good people initially, and that was clear to me. But the biggest problem to me was one, I was slightly more ideologically aligned with fulfilling a mission in crypto, which is let's make this space more transparent, more accurate. But two, which really bothered me, was that at Binance, you could not have a Twitter profile at that time. It was not allowed to have public presence at all. And that's ultimately what made the decision the easiest for me, which is I knew that I wanted to have a public profile. I knew that I wanted to control my distribution, my audience itself, and Binance prohibited everyone. So I would have had to either killed my Twitter profile or just not tweet at all. And, funny kind of looking back is I don't really tweet much anymore, but it was important for me to build up my own audience. And Binance wouldn't allow me to do that. So I think that was the main decision.
All right. In terms of growing your own audience, for someone who's starting out now, how important is that aspect? And what should be the split of actual research and trying to think that, okay, this is where I want my profile to be?
It's super fucking important. I cannot overstate or understate how important it is to have your own audience, even if you work at a different company. It's mind-boggling to me that, we have 25 researchers or so at the block, and most of them don't tweet about their stuff or don't tweet that actively. The thing is that Twitter, it becomes a lot less useful once you hit a certain number of followers. So for me, having over 200,000, I have almost no benefit with growing that account to 500,000. Mainly because I'm not trying to make money on my audience.
Right.
If I was, maybe it would make sense, but I'm not trying to do that.
Now, if you're dumping on them, it would help to have a higher number.
Of course. If that's your intention, then build the largest audience you can. Ideally, dump people and dump on them. That's not what I was trying to do. What was important for me is, first off, become someone that has somewhat of a recognizable name. And two, someone that can reach out to almost anyone in the industry and get a response. That's by far the most important thing that Twitter allowed me to do, which is I've gone from, a few hundred people to a few thousand to a few tens of thousands to a few hundreds of thousands. Really, you end up being able to reach to anyone once you reach maybe 15 to 20,000 followers. Where even when someone reaches out to me, I will check, do any people that I follow this guy? How many followers does he have? How relevant he is? What's his position? That's how I will decide if I spend a time on a person. That's what everyone ultimately does, right? It's you want to talk to people that could help you in some way in the future. Ultimately, it's all a networking game. And if you don't build up your Twitter profile, and let's say you get fired from the block or from somewhere else, what are you going to do? You're going to use your experience to get another job. But ultimately, if you have 20,000 followers on Twitter, not only will the jobs come to you and ask you to work for them, but you also have the ability to network with more people. You have the ability to find probably better conditions. It's a complete no-brainer for you to be able to connect to anyone in the industry. And that's insanely grateful for, Twitter for that specifically, and which allowed me to then, ultimately be in the position that I am just because of Twitter, the only reason.
And can you break down the anatomy of growing your Twitter account? What should a person do if they are starting out now?
Yeah, it's hard. I think the most important thing to me was let's not worry about how much you grow the account. Let's actually worry about sharing stuff that people should care about, right? Let's share things that could be helpful. And you need to be active. So it's a huge time investment. So when I stopped tweeting, it's almost you almost do a detox. You're used to spending 2, 3 hours, 4 hours a day tweeting shit, and all of a sudden you have free time and you sort of miss it in some way. It's mostly a time commitment thing and mostly sharing things that people care about. When you're a really small account, you need to find your kind of core group of people, 5 to 10 Twitter accounts that you hang out with, respond to them, they respond to you. And the hardest part is hit the critical mass, right? Which is probably, 2,000, 3,000 people, so that you can then, when you have a good tweet, it actually reaches people. The hardest part is when you have almost no followers, you don't interact, you have to respond to other people. You have to find the people that will interact with your tweets initially. That will then help you reach more people. It's a snowball eventually. Most important thing is if you want to build a high quality audience on Twitter, you probably shouldn't worry about it too much. That shouldn't be your goal. Your goal should be, I need to share things that people will care about. I need to be involved. If there's a Twitter discussion about Curve versus Uniswap, I need to opine. Even if my opinion could be stupid, it's your opinion, whatever, but you need to participate with what's happening on Twitter. You need to find your crowd and then just grow it. Eventually, you'll hit big tweets. You'll do something that gets retweeted by CZ or someone else, ends up reaching, 200,000 people. And that's how you eventually make it to a large account. I will say the benefit of having too large of an audience is super tiny, especially when you're not dumping on your followers or not trying to create exit liquidity. For me, the Twitter experience got a lot worse from 50,000 followers, mainly because you attract a lot of bad attention as well. A lot of people end up hating and creating drama for no reason. It ends up sucking you in. And also, too many people rely on your thoughts. Sometimes you just have a dumb opinion, and that's fine, right? No one always is right, including people like Kobe, right, on Twitter. People are often wrong. Some people are wrong more often than others, but eventually you're wrong. And if 200,000 people listen to your dumb opinion, even if it's just 1 out of 10, you end up harming them in some way. That to me, I think, was the most difficult, is that people pay too much attention to you and they blame you if they make a decision based on you, but not really, the other way around. And eventually it just becomes toxic and you realize that it doesn't help you in any way to keep actively participating.
Okay, so something again, right? I mean, you mentioned that in 2018 you were in the trenches. you didn't know how quickly this thing would grow, but you had some conviction in Bitcoin and Ethereum and that these things have some sort of a staying power. Like since then, are there certain projects that you are wowed by? Okay, like this thing is something different and okay, this might change the way we do things.
There are projects where I'm wowed by the technology, but not wowed by the upside. I think what I miss the most, and it's hard to imagine we ever get it back, which is that if you had a high conviction in 2019, 2020, I don't know when it exactly was, you could actually make a shit ton of money if you were right. The problem now is that, like, if you believe with like what Starknet is doing, for example, right? If you believe with their scaling approach, you believe in their people and their technology, the token opened at $20 billion and now it's trading at like $4 billion. Like absolute best case scenario, you end up making like a 20x and it will take you years. And that basically would be a blowout success, right? You no longer have these chances where you're buying something for like $100 to $200 million valuation or even lower, where it could be a $50 billion project. So upside wise, I think the space is kind of fucked, honestly, for people like myself and for retail people in general. But when it comes to actual technology, I do think there are things that are being worked on that will be breakthrough. I still deeply believe that ZK rollups are the answer to scaling. I think Starknet has a really good approach. I think ZK Sync has a good approach as well, but it's not necessarily something I would want to buy a lot of, unfortunately.
Right.
And that goes against what crypto used to be, which is the opportunity was there for people to be right and be wrong. And if you were right, you would make a lot of money. If you were wrong, you would just lose. It's much harder to do now in the liquid markets, and that's a shame. A lot of the upside is still in private markets. It's an access-based thing. So, if you don't have enough Twitter followers, you're not connected, you're not getting access. And even if you are connected, it's still hard. It's like there's hundreds of projects that you have to pick out in the private markets. But the thing is that it's no longer really happening on the liquid markets. And that's something that makes it a lot more difficult for newcomers as well as new analysts and researchers to make a lot of money.
I thought John from DeFi has an opposite opinion of what you just mentioned, right? He was saying that private markets are so crowded. VCs already manage 3x the more money than the sophisticated liquid funds. And if you are investing in the later stages and not in the angel rounds so that you can get in size, by the time you are getting to invest, the valuations are already through.
Oh, I agree. Right. I agree with that. And I've done angel investing myself, probably 15 or 20 investments. And you'd be surprised how badly they've performed. They're performing okay on average. I think on the average return will be, I don't know, 2 to 5x maybe. But a lot of them are dead. It's not easy in the private markets. That's not really the point I was trying to make. The point is that there's a lot less opportunity in liquid markets than there used to be. And I think, Arthur could argue against that possibly, but I don't know how he could, because very rarely outside of meme coins, you have the opportunity to buy with sub $20 million valuations and actually hold on liquid markets to get a 10, 20, 30, 100x. It's so uncommon, which is why people are gambling on pump.fund and all these things, because that's the only way where you can get these crazy casino-like returns, almost like lottery-like returns. That used to be possible with DeFi. It used to be possible with normal projects where you could bet on the product, not on the community. That's no longer possible.
You think it needs to be fixed? And if yes, are his ICOs, bringing back better ICOs, one of the ways to do that?
I think it probably can be fixed to some extent, but it's harder because there's just so much attention and that just means less opportunity. So I think there's things you could do to make it slightly better. The thing that's the most challenging is if you are of the caliber of Starkware, let's say, right? And Paradigm, buys a private valuation of $5 billion. It's really difficult to launch that project at, sub $100 million if Paradigm is buying at $5, right? So if the price discovery mostly happens in the private markets, you ultimately just have to wait if there will ever be a good opportunity to actually buy it lower. That's a really tough problem to fix. Even no-name projects are generally raising at 30 to 40 million valuations, which is okay-ish, but you don't get that opportunity once they launch. Most of them, if they're a quality project, they will never go below that valuation. Some of them do, but those are generally low-quality ones. So, I think it can be fixed with some distribution changes. I think ICOs, their benefits and huge disadvantages to them, and they were mostly, they were stopped being done because regulations mostly. The magic of ICOs was no KYC. once you introduce KYC, things get a little hairy, right? Like you get a lot of restrictions, maximum size, access and all those things. Like, for example, what Infinix did, Kain's, founder of Synthetics, Synthetic project, that is interesting, right? That's like effectively like selling an NFT that will presumably eventually convert to token. So almost like replicating how ICOs used to work. That's, I think, a cool way to test this hypothesis if this will actually improve how the token actually performs. I don't think ICOs will ever make a huge return. I think unless like something in US politics changes drastically. Maybe if Trump wins the presidency, which will be decided by the time people listen to this podcast, I'm guessing, maybe things will change a little bit where it's a lot friendlier. But as we said today, you're limited quite a lot by all the regulations in the US.
What is your guess? Where are you leaning in terms of the presidency?
I think the Trump presidency is a lot better for crypto long term, specifically for non-Bitcoin assets. I think, for new projects, for friendliness of being able to start a crypto project in the US, Trump is a no-brainer in terms of if you're just voting purely on crypto and on US being competitive with housing really good crypto projects, then Trump is a no-brainer, if that's the only thing you care about. Now, I think even Harris is not going to be as bad as Biden, would be my guess. I think it's probably going to be slightly better, but I do think she'll be worse than Trump in every way for crypto. I don't think that affects things that much, specifically on the Bitcoin front. I think for Bitcoin actually doesn't matter that much. I think for Bitcoin it's like relatively indifferent. The only thing is like, if Trump wins, like we might get there faster. We might get to higher prices faster. With Harris, it could be a slower thing, but I don't think it matters that much. I think, again, if I'm acting purely on their crypto views and what they will do, Trump is better, and it will be better for projects launching, and I think for distribution and for US friendliness overall. Politically, I disagree with both candidates on quite a few issues, but I think crypto-wise, Trump is a lot better.
Right. Yeah, I mean, I have a similar opinion. I think by someone becoming a president, if the industry is going to die, then that industry is in bad shape anyway, right? I mean, if one...
Of course.
Right.
Of course.
So
the biggest threat ultimately is that someone in power eventually makes Bitcoin illegal to use in the US. I think that's always been the biggest threat, is that, of course, you can still use it, but, if someone finds that you use it, you could go to prison or something. That would be the disaster scenario. I don't think that scenario is realistic, even remotely, with Harris being the president. But that's generally I think the nightmare scenario is that you make Bitcoin illegal, or you regulate the off-ramps and on-ramps so much that it becomes difficult for people to actually enter. Those are the two biggest risks. And I don't think either one of those are too realistic, even for Harris.
Right. Like in terms of market structure, and you mentioned about sophisticated players coming in. Mm-hmm. So we have high valuations when the token launches. How important do you think price is as a part of marketing for a project? Right? Because marketing matters a lot, whether people agree or not. But
it's a good question. I think I will start with, I think if you are a new project that's doing a TGE, it's super fucking difficult. It's like you're in for quite a show because you constantly have to manage marketing. You constantly have to manage, exchange listings, token price not going down too much so it doesn't look like a rug. It's really hard to be a project founder with a token, I think. And it's underappreciated how difficult it actually is to compete. Like it's pure competition against other tokens. And you don't just win on product, you also win on marketing and your community and whatever. Obviously, for large projects, like let's say some of the largest projects that launched in the last couple of months, like Eigenlayer, even Starknet, you have the difficult problem of having huge expectations from people out of the gate. You also have a difficult problem of, you probably used your token incentives to, get people to do something like what Eigen did. Starknet as well to some extent, right? Like creating some activity prior to the token existing to justify higher valuation, but then the people that farm the token generally, in 99% of the cases, most will be disappointed, right? Because they felt like they contributed more, they deserved more free money. It's just really difficult to balance these things. Like you ultimately want to be a high-profile project, but you're kind of doomed to be hated, I think, if you are, because you will disappoint people that were farming you. Just look at what is happening to the Eigen token price, right? Or the Starknet token price, or the ZK Sync token price, or Scroll token price. Like there's so many projects that launched that were, easy multi-billion-dollar projects a year ago, and now some of them are trading at lower valuations than the private rounds. Scry is one of them, Starknet's one of them, zkSync's one of them. I think Eigen possibly as well. I'm not completely sure. If you have stuff like Athena, like it's the same thing for every single token launch, which is you're hyped up, you have a lot of users, but those users like use you because they wanted to get free money, they get less money than they anticipated. Your project launches at a high valuation, people sell, token price goes down. Eventually, you probably find a bottom somewhere as long as your token is not a complete piece of shit. So it's just hard, man. It's like I would prefer to be a large project and like write down the price and eventually find bottom versus being a small project that never actually finds any demand and just dies by being irrelevant. But like I will reiterate, competing for attention in tokens, for trading value, for price, for FDV is, I think, the purest competition that exists right now. It's like purely just, attracting as much interest as you can so that you reward people that believed in you early. And it's harder to do when tokens launch higher. So it's just, I think I would probably want to kill myself if I'm heading a foundation right now, to be honest. It's like there are no good answers. It's you're just in it for the suffering.
Do you think founders being, I don't know what's the word, but realistic in terms of their valuation as to where they launch at the time of TGE?
I think a lot of people just can't really affect much like how high they launch, right? I think it's hard, man. It's because like some of these projects raised at high valuations, and therefore, could you go to Paradigm and say, hey, like I think we should launch at 100 mil. I know you guys invested at 5 mil, but let us, this is a good idea. I don't think most will do that, right? Like ultimately,
what I mean is like obviously your last private round is kind of
valuation setting,
a benchmark, right? A benchmark against your TGE, right? So can you be more mindful and be like little lower than what you want you should get or whatever? Like, does that help the problem? Because otherwise, if your token is down only and where you're constantly fighting for attention, it's always going to be supremely difficult, as you say.
It is, but I don't think the project can do much. Like, yes, you can say, let's try to launch at 100 mil. But, ultimately people will just probably FOMO over the launch. There's a lot of marketing around the token listing. Like, I think a lot of projects are just bound to launch high, especially if they're high profile, even if they don't want to necessarily. And I think that's part of the problem is that, like, of course, do I wish that there was more opportunity in the market? Yes. But I don't think it's necessarily a problem of like founders wanting to launch lower. I think it's a problem of there being so much price discovery in the private markets. And it just becomes a lot more difficult to launch lower because of exactly what you said. You already have a benchmark. Like, it's just weird to go lower than that, especially for launch. And that's how people that buy tokens think as well. So I think it's just tough. Like, I don't think anyone has yet figured out this problem. I think there were a lot of people that like think they have some solutions. Like some of the interesting ones are like, let's not do any lockups, right? Let's let everyone sell on day one and then, figure out where the price actually is. Like it could go to zero, but that could be a good opportunity for retail investors to buy in. The problem with that, again, is like you can't do non-lockups. It's just not legal. If you're raising a private round, most US laws require you to have at least 1 year lockup for every investor. So I think there's like legal problems. There's also, this is just an example. I don't actually think that's a way to fix it, but it's like a creative one that could be interesting to experiment with. But I don't know what the answer is. I think the only answer is regulations have to be more lax. There has to be more price discovery in public markets versus private markets. I don't exactly know how to accomplish it, but that's what needs to happen.
All right. And you talked about angel investing, right? And you mentioned that you have a few. I'm assuming like those are spread across a few years.
Correct. Like last 5 years. So
Right. So how has evaluating those options changed for you? Because I'm pretty sure that you say no to like almost most of them. Right.
Mm-hmm. Yeah. I mean, like, this is like 10% of my time, maybe 5%. So I don't spend a lot of time on this. And I also don't have infinite amount of capital because I'm investing my own money to be able to put in a lot of projects. So to your point, I am fairly selective with what I actually invest in. And despite that, I've been wrong quite often about things that I invested in. Like some of these projects don't exist anymore. Some of them, they don't even do TGE yet. And I invested 5 years ago, despite them saying they would do it within a year, right? Like there's a lot of uncertainty when you do this stuff. I think what has changed is that I think it's slightly more now for me about one, feasibility of the project to actually have a decent value capture of the token, and two, the character of people that end up running the projects. I think generally, some of the investments I made 4 or 5 years ago, it becomes quite obvious quite quickly to me after like a year of knowing the person if that investment will do well or not. Like sometimes I invest and like a year later I'm like, yeah, sure, this is for sure going to zero. And most of the time I'm right in that. When I get to know the team a little bit better, like understand them, my sense is very good in like how it will perform. But ultimately you have, a couple of hours to make a decision, or, a couple of days maybe to figure out if you want to invest or not. And it's hard to get to know someone well enough to be able to figure out their character. It's hard to know, the competitive landscape as well as they do. I think it has to be your intuition. Ultimately, it has to be something that you believe will do well in public markets. Most of the time, it's like, yeah, I think this product is cool. It could do well. Therefore, I'll do it. But yeah, like I said, I'm wrong often. I hit some like big winners, but a lot of them end up going to zero. And I disclose all this, by the way, so all this is public.
Right. Zooming out a little, like looking at the industry as a whole, what do you think in terms of infrastructure, in terms of UX is lacking and should be fixed? And I don't know, probably if that is fixed, like whoever does it gets rewarded for it.
Yeah, it's a good question. I think the on-ramps are still not perfect. I think I think in a couple of years we'll be in a better spot where you can do like a Stripe transaction that onboards you really quickly into a token already. Again, regulations are stopping this a little bit, where it's like so easy to buy NFTs with a credit card, but so hard to buy a token, which you need for a certain application. I think that will hopefully get better. UI UX overall, like I said, it's still so difficult. Like you're using a layer 2, you're using like Base or something, and you want to go to Solana. It's just not a good experience for people overall. You have to at least understand it a little bit. I can't imagine like my parents jumping on chain and like doing some transactions without getting rugged or deceived somehow. And I think there's still a long way with like having products that are more friendly for users so they know what they're doing a little bit more. Overall, I think there's just a large UI UX issue still. And the most important thing right now, I don't really think it's infrastructure anymore. I think it's more regulation, and then it's just user adoption. Like building apps that people actually want to use is the biggest problem. Like how do you make crypto so good so that some applications are not possible without it? A good example is Polymarket, right? Like everyone knows about Polymarket today because of the election, but Polymarket uses crypto rails to be able to, secure the open interest. Right now they use Polygon. Doesn't really matter what they use. It's just like, that's not really possible to do outside of crypto. We can analyze how much money they have, how much open interest there is purely by seeing how much money is deposited to wallets controlled by Polymarket. We can analyze trading volume. There's just so much more transparency because of that. And not only that, but like doing Polymarket without crypto would probably be much more difficult regulatory wise, right? Like you have to house the cash somewhere. You have to be compliant. You probably need some licenses and all that. So I think like we just need more apps like that where users just come in contact with like, oh shit, like I couldn't do this before. Now I can do it because of crypto, and I barely know I'm even using crypto. That's, I think, is the intended goal. And we're not close yet. But I think like Polymarket is a good step forward. Stable coins as well. I think generally the general population doesn't realize how difficult it is to wire money from Singapore to the US or from the US to Europe. You have to go through like multiple banks. You have to provide documents if the transaction is flagged. If the transaction gets reviewed, you could be waiting 2 weeks. You don't even know why. So there's a lot of like clear benefits with crypto that I think already exist, but we need more applications like that where users are barely going to know they're using crypto, but crypto is going to allow them to use something in a much easier fashion.
Right. And like you talked about traditional finance and studying finance before you got into crypto. Like in terms of valuing projects, you said that you can do all the fundamental analysis that you want, but you'll probably not see the upside. Is there any way that this changes? Like when you say that like apps are the way to go and people actually start using these apps, is it possible that we go back to times where good products get valued better?
I hope so. I think it'll be a good way. I think like right now, seeing some of the deals on the angel side, like the things that get the highest valuation, the highest bid, is always the things that do the best in public market. So like layer ones specifically, if you have a layer one that's raising, that has a good team and like decently well connected, you will see it raising at $300 to $500 million valuation, very likely, if not more. And people will invest in it because they think it could be a 5x from there, and that's good enough to like make an angel investment. Layer twos were similar. I think there's now a little like less demand for layer 2s given how badly, for example, Scroll has done despite being listed on Binance. But I think the overall issue is that like you make a lot of angel investments based on feasibility of how well they do in public markets. And the only things that have done well over the last 5 years are layer ones. So, investing in like the next Uniswap is not that appealing to me because it's hard to win against Uniswap. And even if you reach Uniswap, the valuation is not the best, right? Like you're competing for like $5 billion max or whatever. So I hope that changes. I think it would be amazing if we reward the applications that end up getting real users, real versus, just supporting, tens of other layer ones and layer twos, which is something that I don't think we need at this point anymore. But as an investor, it creates an interesting dilemma, which is like, if layer ones and layer twos keep making you money, why would you invest in anything else? Right? It has to be ideological again, or you have to feel very strongly that it's going to be the app that actually ends up going mainstream.
It also doesn't help that most of the tokens don't have any value accrual mechanism. Right? These are just like
that's right. But like imagine I was hoping that Polymarket would launch their token before the election. Obviously, now the election is probably over by the time people are listening, but the election is happening today. And if Polymarket launched a token in the last 2 weeks, what would it be trading at? It would be the first application that's not like purely crypto, but it's powered by crypto. And the token will probably be trading at $5+ billion, is my guess, right? Maybe slightly less, maybe slightly more, but like it would be in the $1 billion+ range, I'm guessing. I think that would have been an amazing start for like an app revolution. It's like, shit, this is actually possible. You have so many real users that are not even oriented in crypto. On top of that, you have a token that allows you to accrue value because, maybe 10% of your profits go to token holders and you get whatever the fuck, right? Whatever token mechanism they would have thought of, as long as there's a real mechanism and there's a real profit there, that token would have traded high. And that would have set a very good benchmark for other apps to be able to compete with that, increase interest in private markets so that there's more apps that try to do what Polymarket did for other industries, not just betting. I'm a little disappointed they didn't because I think it would have been the best possible shot and they also would have gotten the best attention. But I also understand probably why it didn't happen because, betting is ultimately gambling and listing gambling tokens on centralized exchanges is just really difficult. So it's like one of the biggest restricted tokens.
Is that why Pump Fund is also not launching a token?
I believe so. There's two reasons, right? Like one is that it's making so much money that you would rather get the money than gamble on a token. That could be the bond market's case as well. But the second reason I think is like, if you did a token, the biggest benefit is that you can reward employees. You can sell your own tokens so you can cash out without actually taking profits out of the company ultimately, because you have people betting on your product to actually exist in the future. That's not really possible with just like distributing profits. But yeah, I believe right now the biggest problem is that Binance, Coinbase, Upbit would not list a token that is based on election betting. I also think my guess would have been that Polymarket tried to do this and Coinbase told them to fuck off, Binance told them to fuck off, mainly because they don't want to interfere with an election, right? It creates insane amount of attention on you. And two, because I think it could be classified as gambling.
Right. I mean, with ETFs, etc., I think we are going more and more towards TradFi and the lines are slightly blurring between TradFi and crypto. Do you think, how far are we from, of course, CPI, etc., all these micro factors affect BTC price action these days, right? I mean, Every serious trader is looking at these numbers. You think at a point where there are traditional research shops that have crypto analysts and it's just the same it's just a different sector?
I think probably. The biggest advantage of crypto still remains, which is the 24/7 market, right? So, and it's a 24/7 liquid market that never stops and very liquid. Not just, obviously ETFs are limited, but if you look at the underlying Bitcoin market, it trades all the time. And that's interesting, trading instrument for anyone, not just crypto traders. Again, you can make an example around the election. Bitcoin price will be affected quite a lot about who's projected to win at whatever time, right? So in the next 48 hours, as we start finding out who won which state and, who is leaning to actually win, Bitcoin is going to be volatile based on those results as they're coming in. And for a lot of, hedge funds or, trading shops itself, where are you going to trade markets without actually trading the markets directly? Like Bitcoin's the most obvious one because the market's going to be open. The traditional markets are going to be closed when the election is being decided. And so I think there is a place for Bitcoin just to be a vehicle for traditional funds, traditional hedge funds to use to bet on whatever conviction they have. And I think that already happened 4 years ago during the election, but it happens all the time, right? That there's a huge macro-related news. Sometimes you see it even like earlier on Bitcoin than you would see it anywhere else. It's kind of unbelievable.
All right. The block has a conference in December, right? I mean, what transpired this? Like, how did you decide, let's do this?
One reason is that I think we have a really good business-oriented professional audience that could benefit from a conference that's a little bit smaller. So, compared to like Token 2049, Consensus, and the mega conferences, this is supposed to be the one where you actually go to the venue and like hang out with people there versus just go to side events and like not even really go to the venue itself. Supposed to be more professionally oriented versus just retail oriented. And, big advantage of the block is because we built a pretty good network over the last 6 years, so we can get really good guests to attend, despite the conference being quite small, only for 2,000 people. So I think that was the initial impulse, like, can we actually do this? Can we actually do this well? Can we make money on it? The second reason is that our owner, Foresight, who's obviously the majority owner of the block, they also are interested in, being a co-organizing this event ultimately and being visible at the events that we organize ourselves. I think, one of the reasons why Foresight is now a majority owner is because they want to be more known. They want to be more connected to people that we are normally connected to, because their network is mostly in Singapore and then in Asia overall, whereas the block has generally only operated in the US and Europe. So we have very different audiences, and I think Foresight wants to be more connected to the audiences that we have as well.
All right. And what's your advice? I want for two different TG. One is Analysts. Maybe they have some analyst experience in TradFi and wanting to enter crypto. And the other is like a developer who's probably, done something at Web2 companies and wants to enter crypto.
For analysts, I think the advice is simple. You need to really become obsessed by the space to actually have a role in it at this point. You need to know everything well, and you need to specialize in something where you become a top 5% in that field itself. So you're becoming an analyst now, study crypto in general, study how blockchains work, study how market structure works, study everything that you can get your hands on, become obsessed while you still are at your current job. It's important that, I don't think it makes sense to jump ship. Say you work at JP Morgan and you want to become an analyst in crypto. I don't think it makes sense to like start looking for jobs now and be an analyst in crypto. It's just, you're going to be too far behind of what the normal is. So my advice is like, start studying, start experimenting with crypto, start using crypto, become obsessed, become good at something, find a niche where you can actually be an expert in something. It could be whatever you want. It could be like DeFi market structure. It could be, NFT trading, whatever it is, doesn't matter. You need to become obsessed. You need to have a really good baseline knowledge for that. And, then you can join a company. I think most companies hire on two aspects. One is, how good are you at what you do? If you're a general analyst, it's a little bit harder. If you focus on something, it's easier to find a job. Two, your audience will matter. So if you have 20,000 followers and you're a good analyst, it's a lot easier to find a job than if you're a good analyst or even a better analyst with 2,000 followers. It makes a difference because, the block, Quarks, Messari, Delphi, they all care about distribution as well. They care about like being represented on Twitter and Discord and other spaces. And, so the larger presence you have, the more crypto the better for you and the easier for you to find a job. For example, the blog hires in the most objective fashion possible. Like we have a knowledge test, then we have a practical task, and then we have interviews. Only the best people end up making it to the interviews. And maybe it's like 0.5% historically. It's a very low number that we actually end up hiring.
I can attest to that.
Yeah, it is a complex process, but the beautiful part about crypto in general is that it doesn't really matter to me if we're hiring a 40-year-old woman in Peru or if we're hiring a 65-year-old man in Uzbekistan. It just doesn't matter. A lot of crypto happens, you don't generally, you don't even need to show your face. So we have some analysts that don't even want to show their face. They just write, they do the research privately. And as long as they're good, I don't care if they're, a woman, a man, gay, bi, whatever. We just don't care. It doesn't matter to us. And that's magical, I think, about crypto. It's nothing like it in the world where it's just not important to us. And I don't think it's important to anyone. And to developers, I think it's a little more difficult since I'm not a dev by profession. I think for devs, my recommendation would be, start experimenting yourself, start doing stuff that will build up some knowledge base for you, get connected with as many people as you can, jump into a project, into an entry role, build yourself up. Like that probably would be my advice. One more thing I forgot for analysts as well. A huge advantage will be if you know some SQL, you can write some simple Dune queries as well. If you can pull your own data, not just like downloading CSV files and stuff, but build your own dashboards in Dune or other platforms. And if you can get that data and use it in your analysis, it's a huge benefit. Like that would be a game changer for us. We have two people, one can do it, one cannot. We would take the person that can do it.
All right. Larry, are you as excited as you were about crypto in 2018?
It's a really good question. I think I'm less excited than I was before about like what's ahead of us. I think like the most exciting part is sort of behind us in terms of like getting to the biggest stage. Back then the excitement was like, can we actually do this? Like, is this possible? Is like, can we reach this audience? And it seems like we have already. Now I think the exciting part ahead of us is like, can we actually scale this to millions of users that use this, not just hold Bitcoin? Like everyone like keeps quoting these numbers like, oh yeah, like 50 million people in the US like interact with crypto. I'm like, okay, what does that actually mean, right? Like 99% of them just hold Bitcoin on Coinbase. That's not what Bitcoin's for. Or maybe it is, but like whatever, right? It's not like actually interacting with it or helping you in day-to-day life. I think that's the most exciting challenge that we have ahead of us. And I don't think it's actually guaranteed that we figure it out. I think it's possible we fail. That kind of makes it exciting.
All right. Thanks a lot, Larry. This was a lot of fun. A lot of takeaways for me, not just for people who listen to it. Thanks a lot, man. I really appreciate you spending the time.
Yeah. No, thanks for having me on.